So hello all, welcome to another basic session on the economic indicators. So in this session, we will discuss about one indicator from the housing and construction industry, which is the new home sales, right? So it's about the new home sales, and yeah, when you talk about home sales, there are broadly two main things. One is the existing home sales and the new home sales. So we will focus more on the new home sales in this particular session. So as we know that home sales is a crucial piece of data point when you look at the economic calendar also. Here it has been given 3-star rating, right? Home sales, and there's a month-on-month data. So you can see here that it's a 3-star impact. Again, it has a strong impact on the broader markets. And you can also see that there's something called building permits also as another housing or construction indicator. But in this video, we'll discuss more about the new home sales, its relation to the bond market and stock market in general. And let us also know about the trends of this and also let's look at some charts for this particular session. So when we look at the housing indicators, as I mentioned, that there are multiple housing indicators, such as housing starts and building permits, which we just saw. There is one more called the existing home sales, right? And there is something called new home sales, which we are discussing now. And each indicator provides a unique perspective on the housing industry. And housing industry is very important because of linkages with the broader economy and other sectors in general. Now, when you talk about housing starts, it is a strong business confidence indicator, right? So housing starts or the new home construction, it reflects the business confidence, particularly the builders who have the deep pockets and the futuristic expectation, right? So builders expectation of future home buying trends. So based on that, uh, we get to know the yes, there is some confidence in the business confidence basically, and there is some strong economic growth which is awaiting, right? So that is what the housing sector, again, as a one of the leading economic indicators, we are discussing this. Now when you differentiate this with the existing home sales, so existing home sales, it offers insights into the consumer financial health and mood, but this existing home sales is a limited, it has a limited impact on the economy because there's no new construction involved. It is just the exchange of hands which is taking place. So there is no new thing which is taking place in the economy, no new construction activity. So that is why it has some limited value compared to the new home sales. So that is why the predictive value of the existing home sales is also very less compared to the new home sales. So that is why we are discussing the new home sales in this particular video. And then moving forward, so as we discussed that new home sales is a very important economic indicator. It's a timely economic indicator because it indicates the future economic activity, right? So the sale of new homes are recorded at the signing of the initial contract, so it provides a quicker gauge of the market dynamics, right? That's why this is a good insight and key data point which the policymakers are in fact looking at. And the economic impact of new home sales, when you look at it, new home sales, despite being small in proportion. See, when we consider the new home sales, they will obviously be small because of the larger base involved, because of the residential market. The real estate market is already bigger. In that, there is some degree of alpha getting added. So, in terms of proportion, it will be small. But since it is a new thing and new activities taking place, it can have a significant impact through the investment, jobs, spending, and even the production levels for manufacturing. All the data points which we're discussing are in a way kind of interlinked, and each provides a crucial insight, right? So they can trigger spending in construction, materials, labor, job creation, furniture, and such things, and also the home accessories, industries, etc. So overall, understanding this new home sales trend is very crucial to get the understand the strength of the economy, the future potential, etc. So as we've discussed, it has some predictive nature. because it is closely watched as it indicates the shift in consumer spending, right? Whether they are more optimistic, pessimistic, such things we'll come to know through the new home sales data. And if there is a decline in the new home buying, it can also indicate a wider economic concern affecting sectors like banking, construction, and retail, right? So this is again a link to all the sectors like banking, which has imprint on every sector. But banking's in banking, we can say that home loan component, the mortgage component is very strong, indicates of the banking sectors and lending prowess also, right? So that is also a strong linkage to banking. And then coming to the housing role in the economic recovery, assume that the economy is down, it is in a recessionary tendency. A housing sector can often lead the economic recovery. For example, when the new homes sales start picking up, right, that is when we can clearly come to a conclusion that yes, we are about to end the recession, and we are coming out of the recession. That is what the new home sales can give as a piece of information during a recession, because when the lower mortgage rates, they make the housing more attractive, and they can spur new construction activity. And of course, during recession, it's all about cutting the interest rates to spur the economy. And once the interest rates are cut, the mortgage rates become very low, and that makes the housing rates more attractive. And this leads to a pickup in lending, employment, construction, and demand for building materials. So that is the overall impact of the this particular piece of information. I mean, the utility of this key data point. Moving on. So yeah, before discussing this impact on the bond, let us quickly look at the trend of it. Right? When we're particularly looking at this new home sales as the key data point today, and as you can see, this is building permits broadly. I'll come to this in maybe next indicator. But when you talk about the new home sales, right, this is the trend what we are seeing from the United States real estate market. So of course, during the COVID, there was a sudden dip in this, and then post that we saw rapid shooting of the new home sales because of the liquidity infusion, lower interest rates, stimulus, all such things. We saw that the new home sales actually reached a strong growth, right? So this was the period of strong growth, and we saw all the markets rallying. But post that, we could see that the housing market started to go into short-term downtrend. You can see here how the new home sales started to increase, but they're increasing at a lower pace because this pace was very, very rapid because of the liquidity infusion. And I think it was till the mid of 2022, we could see some kind of a short-term bottom being made here. So almost at the similar base, right? So just try to read this as a plain simple line chart, as any chart which you would read. So post this, we could see a simple surge, right? I mean, from the mid of somewhere in the June, July months of 2022, we could see a surge. So this surge was massive, again indicating of a short-term reversal for this overall slow pace of downtrend. So we are currently, so the current trend in the new home sales is we are on an uptick, right? So there's a slow uptick in the housing new home sales, which is again a key indicator telling that the markets are in a good shape. The demand sentiment is good. Again, we can correlate with the PMI also. It was booming. So you can correlate all the data points which we are discussing and come to some logical assessment of the strength of the economy. So the economy is very resilient and strong, right? So this, and when you look at the weekly chart also, this is from the mid of July 2022, right? The new home sales started to take off. And when you look at the chart of S&P 500 from the mid of the 2022, the July June period, you can see that from here this was the short-term bottom which the S&P 500 made, and then post that as rallying in sync with the trend of the new home sales. You can see that the home sales again indicating a stronger business confidence. Again, stock market are futuristic in nature. They also react to the stronger business confidence, and accordingly we are seeing the corporate earnings session also. So overall, S&P 500 is trying to kind of reach back to its previous highs. This is the immediate swing point. But the point which I'm trying to convey is the trend, right? Observe the trends very closely. It was a short-term bottom made in line with the housing making a short-term bottom here also. So currently the trend is up. So on the new home sales, and it is showing that the economy is very strong and resilient. And this is the interesting part is this is happening with the interest rate being at very peak. Whenever the interest rate reaches a peak, so the mortgage rates are very high, and it is at that particular point of time we see that the new home sales kind of start to drop, right? So again, it is a wait and watch scenario to see whether the impact of the Federal Reserve's high interest rates start to play out in the coming days. So, but the point here is that this is a month-on-month release, which has to be tracked. So the next upcoming release is on Monday, that is 27th. We have the next release. So moving on to the new home sales impact on the bonds. Again, we can discuss this in two scenarios from the business cycles point of view. Now, during the economic growth, right, when the growth is taking place, there is a bit of strong growth. A significant increase in new home sales, can raise concerns about inflation. So this is a very crucial point that there is already a strong economic growth, and the new home sales start to increase further. That can stoke the concerns of inflation. So these, inflation concerns can lead to a decrease in bond prices, obviously, because investors are anticipating a higher interest rate, and the existing bondholders tend to lose out when the interest rate rise, and the bond markets generally react to the possibility that since there's inflation concern, the Fed might, tighten the interest rates. They can increase the interest rates to control the inflation. So this is precisely what was happening in the initial period post the COVID, that we could see that the economic growth was very strong and the housing sales also started to increase. So this at this particular point of time, we can say that the inflation concern was stepping in, and which would result in the hike. Right, this was particularly the point when the interest rates the Fed was starting, the Federal Reserve was tightening the interest rates, and they started to continuously increase the interest rate, and to push the inflation under control. And we could also see the impact in terms of how the new home sales started to decline. So again, at this particular peak, nobody should be aggressively participating in the on the long side, right? That's what it is trying to show, aggressively long side on the equity markets in general, right? So this is the point which the first explanation is trying to convey. And then during an economic recovery, I think that the economy had gone into a slump, and then we are recovering. So when the economy is just starting to recover from recession in response to an increase in is generally more subdued, because think that we're in the early stages of recovery. The rebound in the new home sales would not add to any inflationary threat, right? So therefore the bond prices might not negatively get affected because of this. So bond prices in general see if there's an inflationary threat. If there's an inflationary threat, then they possibly foresee a rise in interest rate, and accordingly they react. But in the initial stage of recovery, there's no such threat to the bond price. So bond prices might not be as negatively affected, and interest rates may remain relatively stable. So this is what the uh, precise period, immediately when the COVID fall happened, this particular period when the economy was in slump and started to recover, right? So here there is not much impact. That's what the point is it's trying to do, because here inflation will not be at its peak. Some amount of inflation is good. Inflation is a double-edged sword. Right? Inflation here is a concern. Inflation here is good. So that is the point which the second point is trying to convey. And moving on, the effect of a decline in new home sales. For example, when there is a sharp decline, this is what actually the data points are currently anticipating. A sharp decline in new home sales can be interpreted as a sign of a weakening economy. Right? A sharp decline, if it happens, then yes, there can be signs of weakening economy and a lower inflation. In such scenarios, you can see that the bond prices might increase, and the interest rates could fall. So investors might view bonds as a safer instrument in the face of economic uncertainty, right? So that's the three scenarios from the bond market perspective. So moving on to the stocks perspective, we see that it's very similar to the earlier discussions. I just make to run through this quickly. So we know that new home sales, as I discussed, new home sales is just a small fraction of the overall real estate market. So you don't get so much of reaction, but you get the reaction from the trend perspective, right? So despite the small market share, new home sales are widely recognized as a leading economic indicator, right? This we have discussed. So this means a change in new home sales can provide early signals about the direction of the overall economy. So and it's very crucial at turning points. For example, new home sales data becomes particularly influential among the stock market analysts and investors when economy is susceptible. It is suspected to be near a turning point. I'll just explain this with an example, either towards a growth or a recession, right? So during such times, investors pay close attention to new home sales as they try to gauge the future trajectory of the economy. And they consequently, we know that once this starts to increase or decrease, this will start reflecting in the corporate earnings and the stock market trends, etc. So for this, we can take a similar example of when the downtrend was happening, we saw a sharp rise here. From this, you can see there was a sharp increase. So this sharp increase or even a sharp decrease, right? Something like this gives us a trend for the short-term trend for the market. For example, this particular period saw a sharp increase, right? So what I mean by sharp increase is whenever the price is very close to some kind of a bottoming out situation, a sharp increase in the new home sales can give a good. It was this particular period, the September. It was precisely this time, 27 September. You can see the release of this data. It was 27 September. There was a sharp uptick in the new home sales, and precisely at that particular point of time, we could see some kind of bottoming out happening on the index. It's very obvious that the big investors and the policymakers are looking at this particular data point and accordingly, and combining simple technicals also, right? For example, you can see here that just a minute. You can see here that this overall was 50%. So this overall rally of S&P 500 was close to 50%. And whenever we see such strong spikes, so it is again showing the strong reversal condition. So this is the key thing to be looked at. So yeah, I mean, whenever it is at the particular bottoming out situation close to a key level like 50% and the 60% thing, when a strong uptick in the data can uh, convey that from a fundamental perspective, economies the markets are trying to bottom out here, right? So moving on, this was a particular example for this particular point at the turning point. So a sharp decline or a sharp increase can give a trend to this. So currently the trend is up. So again, based on data, we can easily interpret this now. Now moving on to this is about the stocks also in general, and dollar also. It has limited sensitivity on the currency markets. So because there are other factors which are involved, right? So but broadly, we have to look at it from a sharp decline or sharp thing, and the other factors are more influential in determining dollar's value in the currency market, right? So this was about the overall impact of the new home sales and how important it is. So I just want to draw us to some data points, right? For example, when we look at the HDFC Bank's, conference call, also this year that I'd like to take to some mentionings by them that where the HDFC Limited, which is the NBFC arm, also you can see here that they've mentioned that they had the highest ever, mortgage loans, retail mortgage loans. It was the highest ever. So again, shows the trend of the market, and again, conveying the same point that the economy is super resilient at this particular point of time. So such data point from the banking sector's con call again reaffirm the same understanding. Nothing new in this, right? So Again, one more data point which I want to convey is the performance of the Nifty. See, when we talk about the markets, again, the sectoral location of funds, this is how the Nifty has done in from that period, right? We're taking that uh, as a housing market's turning point from the US. If you take that point as a turning, something like somewhere this was the particular point, mid of 2022, we could see that Nifty from that point of time has given a good rally. You can see around somewhere currently it is somewhere like 30% up Nifty from that particular point of time. But I want to highlight the stark difference in the Nifty reality chart, right? So Nifty reality chart is super strong when you compare to Nifty's chart. You can see here that from the same base of the, if I can take this base, Nifty reality is up almost 90%, almost 3x of what Nifty has done in the same period. So that is how the relative sectoral analysis helps. And when we look at some of the F&O stocks in the reality segment also, again they give a strong in of the outperformance, right? When you look at the DLF, this is DLF chart. So DLF also from the same base, right? From the same base, it has given more than 100% returns. And Oberoi Realty also, again one of the same F&O, has also done well. Godrej Properties relatively has underperformed compared to, there might be some specific situation on the fundamental side to this. But broadly, you can see that how DLF and Oberoi Realty have been strong on the charts same time. So again, this such piece of crucial information helps us also to bet on a sector, which sector might outperform the other. So Nifty Realty was one sector which was clearly outperforming the Nifty almost by 3 times, right? So that's how this piece of information is so crucial for investors and policymakers. So that's it for this particular video. Hope it was beneficial. Thank you.